YouTube, what it do? It is your boy Young Soros here, back with another video. In today's video, there is trouble in bond land. More specifically, the bonds are getting absolutely mollywopped. You got oil climbing up. You got Jerome Powell next week. You got a bunch of economic data coming out next week. So let's jump right into it, starting with the bonds. They are approaching October lows, guys. October lows. And if you know anything of what happened in October, that was when inflation was around 8%. Everybody was thinking it's over, everything, right? And it is approaching these scary levels, and we've been sitting around this range for a long time, and we're definitely higher than the banking crisis in March. So this scares me because if the rates continue to keep going up, and especially if oil keeps going up as well, we may start to see inflation tick back up. And once we start to see inflation tick back up, that is where we can see the bonds start to really get clapped. And then that is where we start to see the systemic risk coming in, especially with the banks, because I don't know how much they can keep holding these rates for longer, especially after what we experienced in March. It was really bad at one point for the banks. And then you have not only that, you have government shutdown. So that is just another thing that is going on within the stock market world. And the UK decided to raise rates. I'm sorry, Europe decided to raise rates once again. Stock market did not like that. Dropped 1.2%, 1.7 on the Nasdaq. But oil and energy, they are starting to approach these almost all-time highs that we had last year. And if you know anything about that, even though inflation is coming down, inflation is a lagging indicator. So even though it came up this month and people aren't as worried because it came in line, this could start to scare people once we start to see inflation really start ramping back up with oil prices coming in, because we don't know where the turn occurred. The turn could have occurred when oil was way down here or way up here, for example. So you got to keep that in mind. There's a lot of things that is moving, inflation and things like that, even though core CPI came up a little bit, just a little bit. Now, with all that being said, we got Jerome Powell next week, and he is going to tell us if he is going to raise or keep rates the same, what he's going to do from there. And then we have the summary of economic projections coming out as well. So keep that in mind. We have a lot on the table for it has been an insane past 2 weeks. There's been a lot of moving parts, and I feel like this is where it all starts to get even crazier as we go into October, November, and December. Because if you take a look at this, what we have here is the Fed rates now. Why am I showing you guys the Fed rates for December? Because if you take a look, it's scheduled to raise one more, and some economists are even projecting that they'll raise two more before the end of December. Now, why is this so important? Because if you take a look at September, they aren't scheduled to raise at all. They're scheduled to keep rates the same. Now, the Fed usually does not deviate from these target rates right here. Whatever this is what it's going to be. The Fed futures determines if the Fed is going to raise rates. The Fed futures usually determines if they're going to raise rates, if they're going to cut, or what they're going to do from there. So, depending on what economic data comes out, depending on all these different factors, will determine the Fed funds rate, and that will determine if the Fed will raise or they will cut, all that sort of stuff. They usually don't like to deviate from this, because if they deviate from that, that usually scares the markets. Markets don't like, they don't like uncertainty. They usually try to stay in line with what the Fed funds rate is going to do. Now, Is there a possibility Jerome Powell could raise rates? Yes, there is. But he will scare the shit out of everybody in the stock market, and we do not want that as investors. So keep that in mind, guys. There is a lot riding on this. As it currently stands, he's going to keep the pause, but if you keep going out, the the probability the rates keep going down. He might raise in November, and people are even scheduled to rates by the end of December. So this is very interesting. As of right now, they think rates are going to go higher, and I personally think rates are going to go higher. And maybe it'll take a month or two for Powell to realize this, as inflation already ticked back up, and on top of that, you have oil breaking out, and then you have the dollar and all this other stuff. So with that being said, for all these different things moving on, and then the UK, they didn't decide to stop either. So keep that in mind, guys. It is going to be an interesting week with Jerome Powell. You have a bunch of other data too, like you Canada's inflation report. You have a whole list of things to watch for. Japanese data. You have the UK's inflation date, all this sort of stuff, guys. So you just gotta keep watching, be on the lookout. But the main focus is the FOMC and the Fed rate decision, as well as the press conference. Is Powell going to say anything new? Is he going to keep the rates and the rate hikes on the table? If he takes them off the table, stock market can go to new highs by the end of next week. So keep that in mind. Does he keep rate hikes on the table? If he does not, stock market is going to love that, but it is also going to depend on the data that comes out too. But furthermore, if he decides to keep rate hikes on the table, I don't think it will be too bearish for the stock market to handle. But if he signals that he is going to raise in the next meeting or the meeting in December, now we're talking about the stock market getting a little bit bearish going into October. So keep that in mind. You also have the Bank of England. You have their rate hike decision coming up too. The Japanese inflation, all that sort of stuff. It is going to be a jam-packed week for the stock market, guys. And with all that sort of stuff, you gotta be on the lookout. You gotta be on the lookout for the dollar. You gotta be lookout for the bonds. The bonds are sitting at an extremely key level, and depending on what happens, if the bonds can break the lows of October, they could go to $90 all the way to $85. And if you take a look at the 10-year, let's take a look at the 10-year real quick. If you take a look at the 10-year real quick, yeah, we're almost approaching 4.5% on the 10-year, which is kind of insane. And you would have to go back a really far time to go see when the 10-year was at, these high levels. So keep that in mind. Also, let's look at the dollar real quick. If you take a look at a dollar's starting to break out. It is at 29.42. I expected it at 29.50 by the end of the week, but once it starts hitting up here, that is the danger zone, and that's where you can start seeing the stock market having a lot of volatility. That's where tech stocks will start to sell off, and that's where you can see corporate earnings start shrinking. So I hope you're ready, guys. That is it, ladies and gentlemen. That is pretty much all you need to know going into next week. You got to keep a lookout for the bonds. You got to watch the dollar, and you especially have to watch oil now that energy is picking up its pace going into October, November, December, which is the colder months, and it's not going to get any cheaper going into those months, and especially going into January. So with that all being said, you gotta keep watch on oil. Oil is going to be the main focus and the main driver. And if oil keeps going up and it hits past these highs, we got a problem. So I hope you guys are keeping track of all this sort of stuff. Make sure you guys drop a like down below, comment and subscribe, and I'll talk to you all later.